Hi, I'm Philip Wright, and I am the CTO of PngMe. We are a risk profiling and insights company. We work with various types of data, both structured and unstructured, where we use machine learning and static analysis to find insights to increase lending outcomes, or to detect fraud, or any type of financial insights. Yeah, so PngMe operates mainly in Nigeria. We also operate in Kenya. We're looking to expand into a few other countries, but we feel like there's a lot more we can do in Nigeria. Right now, we are limited on the data we can get, and while we do get very, very good data, we're always looking for ways to validate that data and enhance that data, and to kind of fill any cracks or gaps that there might be in that. And open banking provides that data in a similar way to what we get it now. We ask for user consent with our current data collection methods. Open banking works off of user consent as well, so we can have a very simplified consent flow, and a user will be able to kind of allow access to a bit more of their transactional data, of their financial data. But after we model this data, we score this data, then we're able to share this back to lenders and to other financial institutions, obviously with the user's permission, to allow the user to be able to have a larger limit on money that they're borrowing, potentially borrow at a lower interest rate, or have access to credit in a faster, more streamlined manner. So I've worked with open banking before in the United Kingdom. I was working for a lending company at the time. We wanted to change the way that we credit scored customers. We wanted to make lending more fair, more equal, and more transparent. So to do this, we implemented with open banking, and we used machine learning algorithms and took various data points from across multiple bank accounts, which we were provided access to via the open banking consent from the end users, and we were able to come up with a lending profile, which enabled us to lend to more people that could have traditionally kind of been locked out from borrowing because they hadn't kind of formed up their credit score, or they didn't have the traditional access to credit. And we were able to lend to these people for a lower rate because we were able to reduce our risk using open banking. So I think the guidelines are a good start. I think they're largely based on some of the European standards, which is great. And as long as we get collaboration in the market from banks and financial institutions, as long as they are willing to share the data, that's fantastic. What I would say is, some of the countries have had mixed success with open banking. The UK is, one of the few places that has made data sharing required, mandated, and I would say that that's worked quite well. So kind of the one thing is you do need a kind of a quorum of data. But as long as the communities want to collaborate, I think it'll all come together quite well. So right now we take SMS data that users consent to us collecting, and we parse that data for financial information, and we're able to gather financial insights to that, which we provide to various lending institutions or other companies for financial insights. With customer permission, obviously. What open banking will do is it will allow us to supplement that data. It'll allow us to ensure accuracy of that data. It'll fill any gaps that we have. And whenever you're working with large data sets, having a validated data set from the source of truth, which are the banks, it's just a win for everyone. So yes, it's really going to help us accelerate our learning and validate our product models.